Mario Gabelli.
Hey, that was Howard. Thank you very much. Here's what I think about the arguments about not looking at tariffs. We have to basically remember that Ricardo may have been right. However, we as a country export $3 trillion and we import $4 trillion. That $1 trillion goes to organizations that don't necessarily have our economic benefit. Anyway, I'm not here to talk about that dynamic. What's important now? What is important now? Thank you again for coming to our 40th annual conference. Today, you have an annual report in front of you that came out of our money management firm, and center row is the list of individuals that have joined our Hall of Fame. We'll be talking about those later, and they're here today, and several of the previous recipients were here. And then you'll hear about the Graham and Dodd Award, awarded by the University of Columbia to business school, the business school, to Jennifer Wallace, and she's here, and we're glad to have her. So let's talk about what's important now. I'll take this mic because I can't stand here. What's the crisis? Do we have a crisis? So what? What's the best thing about us is that we can handle challenges and we can handle those dynamics, because my cousin Darwin said it best. It's not the strongest that survive, it's not the smartest, it's those that are most flexible. That's what we want to do. So what are the crises today? They're challenges and opportunities. This is terrific. That's why the methodology of allocating capital is best in our system. Okay, we had a challenge 5 years ago. We had a challenge that's ongoing. We have challenges with the banks, the Mideast. Food, what are we doing about the world? Energy, what are we doing about the world? Water, how are we allocating that? And obviously, geopolitical. What is the important thing that we think about? The debt of the United States, $37 trillion. Our deficits, we spend $7 trillion and we take in $5 trillion. So all of a sudden, how do we handle that? What are the importance on how to cut costs, less than growth in the revenues? Look at receipts, taxes. How do we handle that? What's fair? What's right? Is it fair to have somebody in Long Island, as an example, have only a SALT limitation of $10,000? Nothing. Tariffs. Howard gave you one of the versions of life about tariffs, and I'll give you another version. And then regulations. How do we want to regulate creativity? And so those are some of the issues. Who are we? I'll go through this very quickly, so fasten your seatbelt because I'm going to catch up on time. This is us. We started the firm in 1977. Our history goes back even further than that in terms of research. Our teammate, Doug Jameson, is here. He says hello. He's been with us 40 years, co-CEO of our public company. What do we do? Why am I adding teammates in Zurich to do research? Why am I adding them in Tokyo? And what are we doing in terms of finding ideas for you? We want the ignored and unloved. Howard wants the loved. I want the ignored. And this is our firm, publicly traded. We do research on a global basis so that if I go out and try to figure out what's going on in the defense spending in Europe, we have teammates that cover that, and you'll hear more about that later. What is value investing? It was started back in 1934. Look at what are bargains. Imagine if we were here in 1930 and somebody said, oh, Smoot-Hawley is going to be a savior. It turned out to be a disaster. Well, you made so much money in the stock market. It was incredible. 1949, this guy takes a course at Columbia Business School. Basically, he says, I learned a lot about investing, and I can do more. And this is 1988. It was a professor that taught me and Cooperman and another generation in 1967. 8 of business value investing was Roger Murray, and we'll talk about him. We have our own version of Mount Rushmore. Okay, Graham, Dodd, Murray, and Greenwald. Greenwald was the most recent teammate that led the notion of the generation of how to pick stocks. What's important? You learn how to analyze an industry, analyze a company, analyze financial transactions. You can be the next treasurer of the United States like Scott Bessent. You could be the next endowment chief. You could be the next treasurer of your foundation. And thank you. And basically look at the world of how to buy businesses. So that's the awards we give. And let me, if I can go back, I can't go, there we go. This is our Hall of Fame inductees this year, so we thank them because they all worked their fannies off 24 hours, 6 days, 7 days a week to make money for our clients. And this guy here, you know, he's not retiring. He's chairman. He's got 37% of the vote, remember that. And Greg Abel, that he's, even though he's in Des Moines like you, he understands how to allocate capital. So what's the press doing today? They're talking about the 13 Fs. So let's talk about Berkshire Hathaway. We started the firm in 1977. If you put 64,000 in, Berkshire Hathaway at that time, it would be worth $493 million, a 20% CAGR. No dividends, some buy stock back, some issuance of stock. Long-term investing, not trading daily on triple Qs. And if you had $1 million, Howard, I hate to say this, I know Gamco did extremely well, but it would have been $7.7 billion. So if you're running an endowment, long-term investing, how do we invest and how do we do that? How do we find the businesses? And that's what we do every day for everyone in this room and everyone that we look at, and that's what our teammates does. His annual meeting, we had an annual meeting the other day. We had 4 investors. Warren had an annual meeting, and we were there for our 16th annual conference. Max Sykes ran it, 35,000 to 45,000. This is us, gather array project. You'll hear more about this. As I said, I'll go quickly. What do? We pick up the data, read the cues, go to meetings, and I'll show you some of the conferences that we wrote. And, there's some intensity. I must admit that we started the morning meetings off early. What is private market value? Company's public, like yours. What happens if it goes private? How much will you pay? What are the sum of the parts? What is financial engineering? What are the elements? A change in management like you did 10 years ago at Sony, like you did at so on. And IT&T, and you heard that before with Command when you talk about that. These are some of the elements. You have questions and answers. We'll give you the questions. Maybe we'll even give you the answers later on today. Research meetings. Tony Bancroft, 25th, 11th annual surface and recycling. Why is Republic Services gone from $10 a share to $250? Why is waste management gone up? What do we do about those kind of products? Here's another one that you'll hear more about later. How many are from Boston? Sorry about that. Hopefully tonight we'll figure it out. Yes, we own pieces of the Madison Square Garden Sports. And more importantly, and you'll hear about this later, because each of you have a keychain. It's called the Atlanta Braves. The stock closed at 44. They started the season off 0-7. They're now 22-22. So think about that recovery. Then we have Tony Bancroft talk about our annual defense conference. 31 years we're doing it. Not 1 year, not 10, not 20, 31. And he's going off to the Paris Air Show. He's been at Farnsborough, and he covers that sector extremely well with his team that's here today. And AI, we're going to talk about that with EV, and then obviously what's going on in utilities. Why is the Connecticut power bill going up, and how can it be reduced? Not complicated, just have to do it, and it isn't drill, baby, drill. And the video game industry. The video game, imagine everyone in your family that's stuck on waiting for Grand Theft Auto #6 coming out. What does that mean for Sony? What does it mean for your family members and Microsoft? And obviously, we talk baseball, football, and you'll hear more about this. How about soccer, which is a global phenomenon? Now, Howard gave you some data. The only number you want to look at is the one on the bottom. For the last 100 years, if you were here in 1926 and you put your money into the stock market, you made 10.4%. Inflation during that period was 3%. and look what you earned in T-bills, and so on. How do we allocate capital for you? How do we match what you want and what your needs are relative to earning returns? And Buffett was, Warren is the most tax-sensitive individual that I've ever run across, along with John Malone. And today, by the numbers, I'll give you some quick macro data. Okay, they're in your book. Macro data, tops down. That's not how we invest, but that's how we have to think. And we think about that every day at 8:15. We start a morning meeting with our research team. The United States, as you heard from Howard, the GDP of the global economy is $114 trillion. The United States is 27% of that. And China is 17%. That is an important trading partner on a global basis. And so what we need to know is understand what they're doing. The debt ceiling, and we talked about that before. How do we cut the debt as a percentage of our GDP? How do we do that? You just became president of the United States, and you're looking at the debt you inherited, the debt on a deficit basis, your tariff issues. So how do you solve the problem? Do you hire politicians, or do you hire business people who have gone through running businesses? Okay, we cannot continue with a $2 trillion deficit on the GDP that we have of $30 trillion. It's too big a number. Tariffs. Look at the balance of payments. We export the number in yellow, $3.2 trillion. We do a great job of doing it. But we import a lot more, and our trade deficit is $917 billion. Jamie Dimon, in his annual report in 2025, just issued a number that shows how much of our wealth was transferred to the rest of the world, and what are they holding? How do we contain that? And so the amount that we're transferring every year is $1.1 trillion, okay? It buys a lot of stuff out and that's the current account deficit. It's not a big number with Japan. It's not a big number with Canada. It's not a big number, as Howard pointed out, with a lot of countries. However, it is a big number with this country. And that is, how do we handle that? So what's wrong with bargaining? The individual that's president of the United States grew up in Queens. He loves to negotiate. The problem is the way he's negotiating is greater daily intensity than we as individuals and investors and the press love to chew this up. It's not being handled. The communication policy is quick, fast, and changes all the time, and therefore we have to adjust to that. So he's only been in power for 6 months, hopefully only 42 more. And this guy has a problem. He's got a serious problem. It's not the tariffs. It's not the fact that there's too much property and the unemployment rate and the need to raise incomes. It's this problem. So what I do when I lecture, I tell the Chinese students, go out now and help your country. The professors in the room go, consumer wealth. How are we as a country doing? This data is fairly uncomplicated. We have 10 years, assets have gone from $97 trillion to $190 trillion. Look what liabilities are, $20 trillion. It's not going up a lot. Everybody talks about the debt of the American consumer. It's $20 trillion. It's not nothing, but relative to assets, the net worth has gone from $83 trillion to $169 trillion. So spend. Okay, later on. The only challenges we have that I see as student debt, we should allow students to take their earnings, W-2 income, and deduct it before they pay Social Security or any other taxes to start reducing their debt. You don't need to waive it. We need to find a way to support the students. And that's it. I'm going to go quickly now. Ideas and Innovations, my cousin, Charlie Darwin. Read it. That's what made capitalism and allocation of capital in a free market system with all the faults and the rule of law with all the faults. And then the major element that has driven this country is meritocracy, education. And that is what we like. We like individuals. The other fellow I happen to like, aside from Ricardo, is Schumpeter, Ideas and Innovations. You'll talk more about this today, more later, and that is uncomplicated. If you don't have ChatGPT, I'm not paying anything for it. I can get information. Some of it's wrong, obviously, so you have to have judgment, but it gathers data. Now, 50 years ago, in May of 1977, 50 years ago, these guys showed you what AI can do. R2-D2 and C-3PO. Oh, come on, you don't remember this movie, Star Wars? And then you had individuals that were creative, creating great companies. Imagine if that guy in the lower left came to you and said, give me some money for my venture capital. So then be turned down when you're looking for money for your robots, okay? One of our teammates who's in our Hall of Fame has started a new business. And this is what they looked at recently. And we wrote a book on merger arbitrage. We changed it into a variety of languages, deals, deals, and more deals. And we have it out there for you if you're interested, because more corporate lovemaking will take place. And we want to buy the companies that will go either and experience financial engineering, like General Electric. What did they do? What is Sony doing? They're spinning off financial. What is IT&T doing? What is GATX doing with their European operations and what they're doing? And those are the individuals that are being honored today for their methodology of financial engineering. And Kate Welling was my editor at Barron's when I joined the Barron's panel. She volunteered, in quotes, to help write a book on merger masters, and she covered a lot of topics. And we converted it into a lot of languages. And what we do is plain old spots picking. This one is an example of what you're going to hear about. Why do we like sports? WNBA. What's going on? I'm not a big fan yet of volleyball, but maybe that's going to be interesting, or paddleball, or platform tennis. Let me go back one. One of the companies that we own, you'll hear more about, is a company in Buffalo, New York. Buffalo, New York. And we'll talk about that later. And so that's us. Another one that we talk about is MSGS, Madison Square Garden Sports. And we have a lot of companies that you own that you have not heard about. The press has not heard about it. We ignored it and unloved, but they are going to be subjects of financial engineering and value surfacing. So thank you very much.
This podcast is an excerpt from the GAMCO annual meeting on May 16, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. Investors should carefully consider the investment objectives, risks, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800 Gabelli or visit www.gabelli.com.